Okay, so a couple of months ago, I was saying relax, fixed rates are coming down, everything's going to be okay. But now things have just changed a little bit, so let's talk about why and what you can do about it. Let's go. Hey everyone, welcome back to the channel. My name is Adam, I'm an expert mortgage broker. Today we're talking about interest rates. I seem to talk about interest rates a lot lately because there's lots going on, there's lots of changes that we need to discuss. So we'll get into that in just a moment. First of all, of course, as always, if you enjoy today's video, subscribe to the channel. There's loads of content coming over the next few weeks and months I know you're going to enjoy, so hit that subscribe button. And if you're a first-time buyer, grab yourself a free copy of my ultimate guide to buy your first home. There's a link in the description to a free ebook. It's available on Amazon, of course, but instead of paying for it, go and get yourself a free copy and go and enjoy it at your leisure. Now, let's get into what's happening then. So, a while ago, kind of start of the year really, January to kind of April-ish, rates were steadily coming down. So we started the year saying, you've got to get things sorted 6 months in advance, 7 months in advance. Rates are going up, we don't know where they're going to go, but then things leveled out. They started to come back down again. Inflation kind of looked like it was, settling. Swap rates started coming down. So swap rates are those rates I've talked about in loads of videos. That's what it costs the lender to borrow the money to then lend to you. So that's how they make their profit. They borrow a load of money at a given rate and they lend it out to you at a slightly higher rate, and then that's how they make their profit. So those rates are different to the Bank of England. The Bank of England base rate does not dictate those swap rates, but those swap rates dictate the fixed rates that you see. So just because the Bank of England makes a change doesn't mean that you immediately see mortgage fixed rates doing the same thing. That's why when the Bank of England was going up and up and up still all this year, mortgage fixed rates weren't, and they were pretty stable. In fact, they were going down a little bit. So the advice kind of shifted a little bit. We weren't so hot on making sure that people got their new rates in 6 months in advance, because we knew that if rates kept coming down, we'd be redoing it again. And that was fine until a few weeks ago. So sort of, sometime in May, it's towards the end of June now. So sometime in May, they started going back up. And lots of factors go towards contributing to interest rates go back up. And we think right now, by the time the video goes out, we may well know, but we think by now that the Bank of England will maybe go up again next month, and they may go sort of above 5, towards the end of the year, and may still be going up early next year. Now, I don't know whether that's going to happen or not. We'll see. It may do, but it may see interest rates carry on, going up, because inflation isn't quite where we need it to be yet, and inflation isn't coming down as quick as they thought it would. So we may see interest rates going up a little bit more with the Bank of England. But I don't want you to suddenly go out and panic, because just because the Bank of England is changing, as I said a moment ago, that doesn't necessarily dictate the fixed rates. But it has been crazy times lately with fixed rates. There was a time sort of in the middle of June where lenders just pulled all their rates again. It's like being back in COVID times where lenders just pulled their rates for a few days until they brought them back. That happened when Liz Truss came along with her mini budget. That was interesting times, and we saw rates come back, but quite a lot higher than they were before. So we're back up to sort of 5%, mid 5% for some rates. There are still some lower ones as well if you've got a really good deposit, but on the whole, rates have gone up quite a lot. So let's think then about what you can do about it. Now, if you're a first-time buyer or you're moving house, same sort of principle applies. You're a little bit stuck on being able to do too much about it, because you can't secure a new mortgage on a new house until you've found that house and you've had your offer accepted, you've agreed a price. As soon as you've agreed a price on the new house, whether it's your first house or your next house, whatever, it doesn't matter. As soon as you've agreed that price, then we can do the new mortgage application. And so you can't secure a new rate until you've done that mortgage application. There is one high street lender where that's a bit of an exception. You can secure a new rate once you've done the agreement in principle, but you might not fit with that lender. That might not be the lender for you. I'm a good lender, but that might not be the lender for you. They don't usually have the lowest rate, so we'll see. Across the board, generally speaking, you can't secure a new rate until you can do your full mortgage application. And you can't do your full mortgage application until you've found a property and had your offer accepted. So that leaves you a little bit stuck, needing to move fairly quickly. So if you've got a house to sell before you then buy one, we can't secure anything until you've had your offer accepted on your house. You've agreed a sale and then you're agreeing a purchase. Now, if you're taking your mortgage with you, if you're porting, that's not going to change. That bit of mortgage that you've got now that you're going to move to the new house, that won't change, obviously. It's just any extra that you borrow on top that will be at a new rate. So if you're buying a house, you're a little bit stuck, but just do it as soon as you can. As soon as you found that property, get your mortgage application in. You make sure you've spoken to a mortgage broker first and you're kind of lined up, ready to go. If you're remortgaging, it's different. So remortgaging is just moving from one lender to the next, and we do that normally when your current fixed rate ends. We normally then choose a new rate with a new lender, and we can do that up to 6 months in advance. So we need to start that conversation at least 6 months, if not 7 months, or 6.5 months before your rate ends, so that we get your application in, it gets agreed, accepted, and then you get a mortgage offer that lasts 6 months. Now that means that rate that you've secured will not change. So this is what we were doing tail end of last year. This is what we need to get back to doing now. We need to get that interest rate secured for you 6 months in advance. That means that it doesn't matter what else happens with the economy and the world, your mortgage rate is your mortgage rate. It is set. That is what you will have. So that's the advice. We need to get back to doing that 6 months early. You can start the process a little bit early because it's the offer that lasts 6 months. So as long as the mortgage offer expires after your current rate ends, even if it's a couple of days after, that's fine. It just needs to last longer than your current rate ends. So that is going to be 6 months. And the good thing about doing that is that we can monitor it. So if we do that mortgage application now, we get your mortgage offer in and sorted, we can then keep an eye on things. If things do come back down again and we do see some lower rates available, then we can always swap you over. But we need that safety net, we need that backup plan there ready just in case, because if rates carry on going up, you'll kick yourself that you didn't do it earlier. So the key with all this, whatever your situation is don't wait to see what happens. We can wait to see what happens, but only if you've already got one kind of lined up and secured. So do not wait and see what happens. I don't care if you use us as a mortgage broker or whoever else, I don't care. Just do not wait and see what happens, because you probably won't like the outcome in a few months' time. So get something secured now, and then you can see what happens. And if it changes, you can always reduce it again. So if you want to see, if you want to talk to us about what's available for you in your situation, then we'd love you to. Obviously, you can book an appointment with us directly. There's a link in the description to my diary, so you can book an appointment in there. There's a link also to the website, and on the website you can learn a bit more about who we are and everything. And you can also get in touch with us there as well. Don't forget the link to the ultimate guide to buy your home, your first home if you're a first-time buyer. That's in the description as well. So hopefully we'll be speaking to you real soon. If not, I'll see you on the next video. Take care.